Okay, back to the US equity market moves, and Paul Dietrich is CEO and CIO at Fairfax Global Markets and joins us live out of New York now. First of all, I wanted to ask you about the VIX. This is the fear index, the volatility index, hitting its highest level since late February. Do you pay a lot of attention to the volatility index stateside, and what is it telling you about the level of fear in the market right now? It seems like Brexit is such a wild card.
It is. Brexit is the vote that will determine whether the United Kingdom stays in the European Union or whether they leave. And there's no question that the markets hate instability. And so in the short term, we're going to see volatility because the polls are showing that the vote to leave is 10 points ahead of those who want to stay in the European Union. And so that's causing a lot of this. But you have to understand that this is short-term volatility. After this is over, even if the British leave the European Union, there will be no fundamental changes. There will be no fundamental disadvantage. You have to remember that Britain represents 25% of all the foreign trade within the European Union. And so they have a year after this vote in order to renegotiate trade agreements with the 22 other members of the European Union. That will get done. I mean, people are going to be falling all over themselves to sign trade agreements when Britain represents 25% of their trade. And so in the long run, there will be fundamentally no difference. There will be fundamentally no economic impact. This is a political issue, sort of like Brexit was with the Greeks a year or so ago. There will be short-term volatility, and then the markets will bounce right back again.
Nevertheless, there is a lot of risk aversion in the markets right now, you'd have to say. How do you position to protect against a Brexit, and do you feel the need to at the moment?
No, I mean, this is one of those short-term political events that does affect the stock market for a few weeks. We saw this all last year with the Brexit problems in Greece. The minute that it was resolved and people saw that there would be no fundamental changes in the economy or adverse impact to Britain, no matter what some of the people say, that is what you have to focus on. And it's crazy to try to time the market because the market's going to go right back up again in a few weeks after this is all over.
Let's touch on what we really did see stateside as well in terms of equity market performance, because the other interesting thing is that we often see stocks rising into a Fed meeting, but today we saw a weak picture right across the board. The gold price really on a tear, the yen also hitting multi-year highs, and we're continuing to see bond yields at very low levels. Talk us through this flight to safety ahead of the Fed meeting, and what are you expecting from the Fed this week?
I actually think that the downturn in the stock market has more to do with the Brexit than it does with the Federal Reserve. I do not know a single analyst on Wall Street that believes the Federal Reserve is going to raise rates at this meeting. I mean, nothing has changed since the disastrous jobs report and ISM manufacturing report of a couple of weeks ago. And also, there's what's called the Greenspan rule. Alan Greenspan, former Fed chairman, said that there had been a policy for a long time, a quiet policy within the Federal Reserve, not to raise rates during a presidential election. Federal Reserve members, they understand politics. They understand how their actions can affect the stock market, which can affect politics. And so nobody believes that they're going to raise rates now until after the election, because if they did raise rates and the market reacted like it did to the last rate in December, the stock market would tank, at least for a short period of time. And that's the last thing any administration wants, is to go into an election with the stock market declining.
Absolutely. Paul, we'll have to leave it there. Unfortunately, we're out of time, but thank you for joining us this morning. That's Paul Dietrich of Fairfax Global Markets.